Good morning, everyone, and welcome to our webinar today. We're excited to have Carrie Peters and Mark Rhodes from New View Strategies with us, and they're going to be presenting on 9 questions about business performance you can answer. And I know you're all eager to get started with the presentation. So before I pass it over to Mark and Carrie, as a reminder, we are recording this webinar and we will post it to our on-demand webinar library for you to review again and share with anyone. And we'll also have it available on YouTube. And if you have any questions during our presentation, please feel free to type those into the questions box and we will get them answered during our Q&A time at the end of our session. So now I'm going to pass it on over to Mark to kick off our presentation.
Excellent. Thank you very much, Angie. Hi, everybody. This is Mark Rhodes with New View Strategies. And when Inovia reached out and said, hey, are you interested in doing a webinar with us for our customers? We said, heck yeah, because we just love sharing our expertise and experience. We love working with Inovia and talking about NAV and Business Central. Excuse me. Wow. NAV and Business Central, and especially account schedules. You don't have to ask us twice. So thrilled to be presenting today. And I got to say, in terms of just getting more out of the system and so forth, we continue to be surprised, even more so, how much people don't know about what they already have. And it's a fair question. How do you know what you don't know? And so we've really been focusing on talking about the embedded functionality and features that are already in the system that you own, because nobody can know everything. But if we continue to try to learn more about the system and continue to look for opportunities to really improve your processes, increase efficiencies, reduce errors, provide better customer service, and get a lot more value out of that system to drive your business forward, boy, that everybody wins with that. So we're going to talk today about really understanding and gaining much more better financial insights from your BC and NAV system. And then we'll talk at the end about some of the other efforts we have going on with Inovia and making sure that you continue to learn. So with that, I'd like to introduce Carrie Peters, who's going to wow us with her insights on account schedules. Carrie.
Fantastic. Thank you so much, Mark, for a very nice introduction. I couldn't be more pleased to be talking with people about account schedules. I've been talking with different audiences about account schedules for over 10 years now and teaching classes with hundreds of students at this point, a lot of them with accounting backgrounds, controllers, account managers, CFOs, figuring out how they can do more with their financial reporting. So my specialty is in account schedules, financial reporting, dimensions, budgets, anything related to that. And I truly can talk all day long about this, but I promise I'll spend less than an hour with you today on this. I am a former corporate controller. I started using this product back in 2004, and my whole career has existed because when I started out, I was frustrated about the type of resources that were available for my learning when I was figuring out how to create financial reporting for my company. So I started volunteering with a user group organization. I started teaching classes, and eventually I was blessed to be a Microsoft MVP and now Microsoft certified trainer. And I train people every day on what they can do with their system, particularly in my area of specialty. I have all kinds of funny hobbies, but most of them have getting me outdoors. I love to raise ducks and bees and flowers, especially in the summertime when it's nice and warm. But I have a diverse group of hobbies in addition to financial reporting as well. If you want to get a hold of me, take a look at any of the ways below there on the bottom of the screen. I truly am happy to answer your questions about financial reporting and how you can actually do that with Business Central and NAV. At the end of the presentation, I'm going to share with you some additional resources that you can go out to that are free. They're out there on the web, a couple of sites that I have built with reference materials for account schedules in particular. So I'll share that with you at the end of today's session. But the reason that I wanted to talk with you about this topic today is that I feel that when I see financial professionals creating their reporting, that they're doing absolutely the basics. And a lot of the reason for that is that they don't feel like they can do anything beyond taking their trial balance, putting it into Excel, and manipulating it a number of different ways. And that takes a lot of time, that takes a lot of energy. It's difficult to be able to be creative, and when you have to recreate the wheel constantly. So I wanted to focus today on 9 questions that we can ask and answer with our financial statements. So I'm going to let you read what our questions are. You'll see that there are a few themes here. We'll see lots of comparisons between different time periods. We will see a comparison to budget in particular so that we can see how we are doing against what we planned to do. And you're going to see a lot of things related to margin and how did I do related to product lines, customers, departments, not just what's on my trial balance. So all of these things are easily questions that you can answer with your financial reporting. And I'm going to show you in this session today what that can look like and exactly how you can build it. I will be sharing the design for each and every one of these reports in this session so that you can build it yourself back at your company. I will point out too that all of the things that I'm teaching you today in this session apply to anyone who's using Dynamics NAV as well as anybody who's using Business Central. So you will find that many of the base functions, like what we're talking about today, are the same. They haven't changed. So once we get into some of the more advanced features, then we get newer things with the newer versions. But for the things we're covering today, these will work in almost any version of NAV and Business Central that you possibly could have with your company. So I teach classes about account schedules quite frequently, and especially in our controllers boot camp and some of our other classes. One of the days that we spend is on financial reporting. And one of the very first questions that I ask all of my students at the start of class is, how is it that you are producing your financial statements? And the answer that I get most often is that they are dumping their financials in the form of a trial balance into Excel. And I will tell you that even over 10 years, in a class of 10 people, I will have 7 or 8 people raise their hand to say that that is how they are doing their financials. So if you are doing your financials that way, you're certainly not alone. But I can tell you that you have the tools right in front of you to be able to do something differently with much less effort and much greater results. Here's the other thing that I see companies doing: dumping their trial balance into Excel and then turning it into a categorized trial balance for their financial reports. This is something that always makes me real sad to see, because as I look at financial reports, there are a few things that I believe very strongly that people should be doing in order to make their financial statements tell the story of what's happening at their company. One of the best CFOs that I ever worked for would always stand up in front of his board twice a year, and he would tell the story of the company in financial terms without using a single number. It was an absolutely amazing thing to watch, and one of the things that was a supporting player in his performance as he told his story of how the company was doing were the financial statements. They were incredibly concise. They were presented at a high level and summarized. They were almost always a 1-page or less view, and they always answered a specific question that he could address as he was talking about what was happening at the company. So this is something that I've carried forward into the principles of producing financial reports with everything else, because I feel that being able to tell the story of your company by using your financial statements is an incredibly effective way to be able to communicate with people about how the company is doing financially and get past the block of, oh, I couldn't possibly read a financial statement, or I don't understand that stuff, right? This is bringing those financial statements to everyone in a language that they can understand and a way that they can digest what your results are. Now, the other thing is what happens behind the scenes. If you have to spend days producing your financial statements, if you have all kinds of spreadsheet errors when you produce your financial statements, if you have inconsistent formatting so they don't look very nice from month to month, then you're not going to be as effective at telling the story of how your company is doing, because your reports aren't going to look good, they're not going to look consistent, or they're just going to take you a lot of time to produce. And that's actually a critically important piece behind this. Think about how long it takes your company to close their month end. So if you are spending the whole month to close your month, and creating those financial statements at the end of the month is a big piece of that, what happens then when you show people the results? There is this small moment of despair when people get those results after the entire month has passed. And you know why that is? It's because they can't do anything to change the results. The month that they could change the results has already passed. So even if they change their behavior now, they're not going to see those results for another 30 days. So there's almost a 60-day gap in when you can affect change from the time that you read your financials to the time that you get the next financials where that behavior has changed. So being able to produce your financial statements quickly, almost instantly, easily, in the less amount of time, is allowing you to get those financial statements in the hands of your stakeholders who can actually do something differently to change behavior in the company and affect real change that goes all the way down to your financial results. So this is the reason why I get real excited about financial statements, because you truly can affect change by being the person who produces financial statements in your company, not because you produce them, but because of how you produce them. All right, so let's talk about some practical ways then. How do we address those questions? So I'm going to cheat on this next one. I'm going to answer two questions. I want to talk about how we do with month to date and year to date, two different comparative periods, but I also want to talk about how we compare things to budget. So why are comparisons important? Comparisons are important because if we're looking at data in an island with no point of reference against something else, we really can't tell if it's better or worse than what we did before. And especially if we're somebody who's not intimately involved with the financial numbers like we are all the time, it becomes meaningless because there's no measuring stick to put that against. So always having comparisons built into our reports is a great help. Now, the thing that I'm showing you right now is a highly summarized income statement. This is revenue, cost of sales, profit, expenses, and net income or loss, all in a few lines. This is about as much as you can summarize an income statement. And I'm going to use this report as an illustration for all 9 of the questions that we're going to answer in today's session. So I want you to spend a little bit of time getting familiar with what we see here. This highly summarized income statement is going to help us answer all 9 of these questions today. And there are some key things that I want you to pay attention to as far as what's happening in the columns of this report. So our first 3 columns are a view of what just happened. What just happened in the last fiscal period. And not only what happened in the last fiscal period, but what happened against the measuring stick that we created for ourselves at the beginning of the year, where we said, this is our plan, this is we want to execute to. We want to make this much in sales. This should be our revenue for the year. We know that when we buy the materials to support those sales, it's going to cost us this much, and that our approximate margin should be this, right? One of the best comparisons we can have is actual margin versus planned margin. Because especially when we plan over time, over a year's time, we can be very predictive about how things should be happening. And if those numbers don't compare, if they're far off from each other, then either there's a mistake or there's been a big change in behavior in our company. And that may be intentional or it might be unintentional. So those comparisons are incredibly important there. At the bottom of our income statement, how are we doing with our expenses? Have we overspent? Have we underspent? Those are two incredibly important questions in there, because overspending could indicate lack of controls, surprises, just not paying attention. But underspending could be just as vital, where we plan to spend this money and we haven't, so therefore stuff is not getting done that we said we were going to do, right? So comparison of your actuals in this period versus what you plan to do is big. But then take it to the next level, and still in the same page, in our same one-page view, if you just glide your eyes to the right, now we can see how have we done so far in the year to date, right? So in the past few months of the time period that we're looking at, how have we done with those same areas? So critically important to do comparisons. And in this case, we're doing two different comparisons in the same one-page view document, right? What happened this month versus what's happened with all the months before that. So that's one measuring stick. And the other measuring stick is, how is that going against the plan? So if I want to design this particular view, this is the column layout that you would design in either NAV or Business Central. And it's as simple as what you're seeing in front of you here. We've got 7 columns. One of them is blank to give us some white space to make our report more visually appealing. And we're using some simple formulas for comparisons. And one other very important piece here related to the setup of this report, we are using something called the comparison period formula. Now, there are a bunch of different formulas, in fact, 4 primary different types of formulas that you could use in account schedules, but this is the one that I want you to learn the most about. If you've gone into account schedules for the very first time, you'll probably find that you have a column there called comparison date formula. I want you to go in there immediately and get that off your screen and replace it with comparison period formula. You have way more options available to you with formulas with this particular type of formula, and it's less risky when you produce your reports. I'm not going to go into that today. If you want to know why it's risky, send me an email. I'll be happy to talk with you about it. If you look at these formulas, there is nothing intuitive about these formulas. These are unique to NAV and Business Central, and you'll either have to learn them or find a reference source like the blog that I publish that's free to you, so that you can just look up all the formulas that are possible. But this design with these specific 6 columns is what's going to give you the layout that we just talked about, with the current period, the year to date, and then the budget comparisons. Okay, so use this particular setup and you'll get that same layout that you can apply to your income statement, no matter what type of income statement you have. Let's talk about our next question. If we look at performance over time, this is a different type of question. If we look at what's happened over time, we are asking, what are the trends? So when we looked at month to date and year to date, especially against budget, we were looking at comparison to a particular measuring stick. When we look at 12-month trended views, now we are looking at what is the trend over time. There's no measuring stick here other than we know that our gross profit should be approximately 38%, right? And as we look at the trend over time, we can see that some months it was above that, some months it was below that. So we can see those trends over time, but we can also see, was revenue up or down? If we think about what we do with our planning process, if we have a relatively even flow of revenue that's not seasonal, we may have a certain number in mind where we know that we should have about this much revenue each month to be hitting our goals. If we have very cyclical or seasonal type of revenue, then we may have some additional document that we might want to refer to as we look at this trend. But looking for these trends can tell us a lot. And from an accounting standpoint, when we think about expenses in particular, expenses are generally very predictable. So we know what we have planned. We know what they should be, and we can see if they're too high or if they're too low almost immediately. So anybody in your organization who's familiar with the numbers can probably cite those spikes just by taking a look at this and saying, well, what in the world happened in June? That's way too high. Did we have some big purchase? It could mean that maybe we have a problem with something being posted in the wrong period, right? So we may need to make some adjustments and do some research to find out what that is. But being able to think about the trend over time is absolutely huge. All right, so here's how we would build this one. Using the same 6 columns, you would be able to build our 12-month view with a total. There's a couple of important things to note here that will help you out. The first thing is make sure you're using the comparison period formula. If you're looking at FY1 through FY12, that's our periods 1 through 12 for the year. And if you're looking at something like this where we have all the column numbers as A, that's supporting the simplest formula in the world. This formula right here on the last line, which is our total, is totaling up every single line that contains the letter A. I don't have to make it any more complex than that. And the last thing that I'll point out that's critically important for this report is that our column type is net change. Since we're reporting against our income statement, we have to choose net change. What is the amount of change that happened in that month? We don't want the balance at date. That would be applicable to the balance sheet. But in this case, we're looking at our income statement. So this particular view is going to help you out quite a bit to be able to see that 12-month view. And don't forget that for net change, we need to have a total. We need to see what the net total is of 12 months of net change in order to see the balance. And when we do that, if we compare this to the same view that might have balance at date, that total on this report will tie to the balance of December on your balance at date report. So that's how you can have a little bit of a cross check with your financial reports to make sure that those two things tie against each other. Because of course we always want those numbers to balance to the GL, and we always want to be able to tie key numbers on each report to each other. Let's talk about question 4. This is going to be the same thing that we just looked at, but this is going to be looking at what our plan was. This would be another way to do a comparison. This is exactly the same as our last question, except this is our plan for the year. And the reason you can tell in this particular instance for my budget is that I have nice even numbers that have no decimals. I'm not a big fan of decimals, so of course I don't include those type of calculations when I plan for my budget or for my forecast. But since this is built the exact same way as the financial report that we used for looking at the net change over 12 months, I could, if I wanted to, put these side by side, and then I'm answering 2 sets of questions. I can answer the question of what is the trend, as well as what is the trend against what we plan to do, right? So these are critically important questions to be able to see that. And don't forget that with your budget, you have a little bit of a crystal ball. You have the ability to be able to see, and what do we think we're going to have happen in the upcoming months. So if you only have your actuals done January through almost March, right? Maybe almost February at this point, you have a whole rest of the year to look forward to. And you can get a view into what that is by looking at your budget in 12 months in comparison to the progress that you're making with the net change. So absolutely important to look at that by budget. And if you look at this, this is pretty much the same. You'll notice I used 1 through 12 for my formula here instead of A. I had to work a little harder to create this one, but they both work. And if I look at what's different here, this is the only thing that's different in the design of this particular account schedule. So you could, if you wanted to, just copy this column layout, paste it into a new blank layout, and choose to select budget entries instead of GL entries, and pull your budget into your account schedules. You'll probably tell already I'm a big fan of budgets. I think they're absolutely critical to be able to help you to stay on track. It's too easy for us to forget over a year what the goal was, or it's too easy for us to get wrapped up in the flavor of the day issue, right? And say, well, sure, we'll spend some money on that, forgetting that we had planned to spend some money on something in a couple months, and now we won't have that. So having that budget to keep us on track, keep our eye on exactly what the goal is, and provide that constant comparison is critical. And you can hold that budget information very easily in NAV and Business Central, but I'm not a big fan of having to flip back and forth between my financial reporting area, account schedules, and the budget area. I don't want to have to go back and forth. So I build all of my budget information inside my account schedules so I can look at that information inside the system. The other thing that I'll point out too is when you look at any of these account schedules in the system, and I'm going to go back to this slide so you can envision this a little bit, every single one of these numbers, you see this little guy here where you can drill into that first number for January revenue, you can get down to the transactional detail inside those schedules so you can see what accounts make up that number and what transactions make up that account. You can even get down to the document level so you can see what invoices make up those transactions. So you can get down into the detail from these account schedules. So now suddenly you have not just financial reporting, but you have a really robust research tool to help you figure out what did happen with the June operating expenses. Why was that so high? You could drill into those accounts and into that transactional detail to see exactly what the issue is. So absolutely great stuff as far as being able to build these, not just for financial reporting purposes, but for daily use for research in figuring out what is going on as your books are being put together. All right, let's talk about our fifth question. Actual versus budget in this month versus the same month in the prior year. This is another comparison. And this really speaks to variance review. If I think about what happened this month versus the year to date, or this month versus the budget, I've got one level of comparison. But trends over time, and especially year over year comparisons, are also important. And this is something that I'll always encourage you to take a look at, in particular when you are preparing for discussions with your auditors. I want to know what happened the same month last year because I can see variances, I can see trends, and I know what I'm going to have a discussion with my auditors about and what I'm going to need to explain. Because again, this goes back to the story. If I'm talking with my auditors and I've got a big variance, I sure better have that story put together about why that is. The answer of I don't know doesn't work, right? So we have to know. That's our job to know. So actual versus the same month in the prior year is critically important. And you can do actual year to date and the prior year to date. So January through May of this year versus January through May of last year. Or we can certainly look at just May of this year versus May for last year. So we can construct both those things, but that additional comparison is a great way for you to be able to identify variances over a broader period of time, but also in a more concise way. And I'll actually put together an audit lead schedule that has this particular view on it. And I'll go through and I'm going to take a guess at what I think an acceptable variance is year over year. And if it's over or under that, I'm going to pre-research that. I'm going to understand what the story is about why that particular thing is over or under by that much so that I'm completely prepared when my auditors come in and I need to tell them the story of what happened with that revenue or why operating expenses were different. So great to be able to be prepared for that, and this comparative view will help you with that. So this is a nice easy one. We're using a few more elements of some of the other things that we talked about here. Again, take note that we still are only using these 6 columns as we're setting up this column layout. We don't need to use all the other stuff that you see in there. There's probably twice as many of additional things that you just don't need. At this point, we're going to keep it simple. We still have our comparison against budget to make sure that we're staying on track with the current month information, but that comparison against the prior year is good. Don't forget too that you could have comparison of current budget versus the prior year budget as well. So I see a lot of people working that element into a similar particular schedule like this. Now again, we're going to lean our comparison period formulas. This is a special formula, -1 FY means the prior year. And pay attention too on this one, column type. This one I have set for net change. So this would show me May of this year versus May of last year. If I had this set to balance at date, this would show me January through May of this year versus January through May of last year. So you absolutely can repurpose what you're using here so that you can use the same thing a couple of different ways to answer a slightly different question. It's not uncommon at all for companies to have maybe one income statement report and 10 to 15 different column layouts that they can match with that income statement. So this system allows you to be incredibly versatile and to be able to answer all those different questions simply by applying a different view. If you're a company who produces a financial statement package, you could absolutely have 15 tabs in your financial statement package where you have your income statement repeated with all those different views because it's telling the story, because you're answering all those questions, bam, 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 right in a row as you go through those pages of your financial statement. So absolutely great stuff to be able to do something more than having people just looking at that one income statement and trying to figure out what that one report is telling them. All right, this one gets a gold star because this is my absolute favorite column layout. And I will tell you, I'm just going to admit that I built this particular view out of pure frustration. So you ever have one of those moments where you're trying to explain something and you're just not doing a great job and you say, all right, I'm just going to fix this once and for all, and you build something beautiful, right? It could be some kind of really fantastic PowerPoint presentation that explains things. It could be an Excel spreadsheet with some fantastic formulas. Well, in my case, it was an account schedule that answered a really critical question that I was being asked all the time. How much budget remains? I will tell you that at this point in my career, I was working for a company where I had 38 departments who reported to me for their budgeting processes. And they didn't have good visibility into the system. So they came to me or to my team to constantly ask how much of my budget is left, Carrie. And I got frustrated because I couldn't get to them fast enough. I couldn't get their questions answered fast enough. They had to wait. And I knew that they were trying to get that information so they could do better, right? So I created this particular column layout. Now, for those of you who are paying attention so far, these first 6 columns are the same 6 columns that we had that answered the first question. The difference are the last 2 on the end. Those last 2 questions probably saved me a day a month in answering questions for people. Because what we did is we said, okay, let's add a column that says, what was the total budgeted amount for the year? What's the total that we said we were going to spend for the year, and what's left? And this last column was the thing that they wanted to know. How much the salespeople still needed to sell. That was the number 1 question for the revenue line. If they sold this much, what was left? Or were they over their goal already? And if we looked at expenses, the same thing. If I talked to my different cost center managers, what did they have left in their budgets to be able to spend for things? And they could look at it at this level of detail, or if I had another report, which I did, that had all of my operating expense accounts layered out, apply this view to the list of operating expenses, and they could see exactly what they had left to do, or if they'd gone over on something, how are they going to make up for that? This particular column layout made them completely in control of what they needed to do to manage the funds for their departments. And the really beautiful thing is because of this, I also got to get every single one of them hands-on in the system and pulling these reports themselves on their own time. So we made it self-service. That way, anybody could get the answer to their questions at any time. We taught them not only how to run this report and how to view it and how to filter it, but we taught them on how they could drill down into the numbers. So they could also monitor what was going on as the month was happening, so they could see what progress was being made with the particular area of the company that they were responsible for. And that created a lot of actionable change, where suddenly we were able to talk about things like how different departments could affect cash flow for the company, right? We never would have been able to talk about how different departments could affect cash flow for the company if we had not first made it possible for them to monitor their own results and understand how much of their planned budget was available. So these kind of reports really opened things up for that particular company to help us to do better by giving people more information that they could get to by themselves so they could change behavior when they needed to change that. So very cool stuff. Here's the design for that particular area. Now remember that this part at the bottom is the only thing that's different. I show a little red square there for you. So I'm using just a couple of different things. I'm using a different formula. Instead of current period in my first section and year to date in the second section, I've got the whole year. That's what that formula says. And I'm just using some simple math here to be able to say, out of what was planned for the whole year and what was spent to date, what's left. So absolutely my favorite because it saved me tons and tons of time. All right, so I'm going to answer the next three all at once. I want to talk about dimensions with account schedules. Dimensions with account schedules are critically important because this is how you move from just financial reporting into operational reporting, because you can suddenly work in elements like products, customers, departments. It's not just general ledger accounts and periods of time. Now I could have general ledger accounts and products. I could have general ledger accounts and customers. I could have customers and products, right? So the general ledger accounts are in the background, they're still there, but your report could be showing you cross of who is buying what and what is the margin associated with that. That's how we start to really get an incredible amount of intelligence out of exactly what we're producing there. So here's my same income statement view. And in my columns, this is the first time that I haven't used a period of time. What I've done is I have put in my different departments in this case. So I have 3 departments and a total. And one more thing that I want you to pay attention to here, I have a column that's in here for blanks. Now, I will tell you, if you design your dimensions so that you have proper control on how you're gathering that data, you absolutely can design your system so that you will not have blank dimensions in your system. I will tell you that a lot of people either don't know how or lose their resolve to force people to put data in the right place, which is what they wanted, and they end up with blanks. And what happens then? Then accounting has to fix it. Well, in order for accounting to fix it, accounting has to find it first. And this is how you're going to find it. Anytime you're using dimensions in an account schedule, you're always going to work in a column or a row to find those blanks if there are any. In this case, we don't have any. Fantastic. That means all of our controls are working. We haven't lost our resolve, and all of our data values are being tagged properly so we can see how those different departments fall into this report. So think about this in a different way. What if in the top of this report we had products? What if in the top of this report we had customers? And what if we were measuring the margin on all of that? Now we're getting into some exciting stuff where we can answer some very different questions because we're incorporating dimensions into these reports. So suddenly it's not the bottom line that we're focusing on here. It's not just whether the company is making a profit or not. It's How are we generating margin in one area or another? How many times have you gotten a measurement like this where you've looked at it and you were completely surprised that something that you thought was not very profitable at all was profitable, or worse, if you thought something was really profitable and it was much less profitable? Think about how you could direct your energy in your company to be able to affect change in your financial results if you knew what the margin was by customer and by product. Certainly, what would happen if you knew what was happening with your different departments or cost centers and whether they were on track with their spending or not. So great stuff here, and this is taking advantage of the fourth type of formula with account schedules, which are dimension totaling formulas. Now, I have added one more column into my layout here in order to do this. So now we're moving into the intermediate land to add information into this column layout. But these different departments in this case are accessible because I've added that in, and behind the scenes I've got my general ledger accounts, and this is giving me a slice of each of those. So in each column I'm getting a slice by department of those different operating expenses, or by those different customers, or by those different products. And remember, if you've got multiple dimensions, right? We've got our global dimensions, we've got shortcut dimensions. We may need to use an analysis view to be able to reach those dimensions in account schedules, but you absolutely can reach every dimension with account schedules. I have lots of people say, my dimensions are useful, I can't report against them. That is not true. If you are using analysis views and account schedules, you can look at every single one of those and get some amazing reports, and don't forget, research tools out of that. All right, let's just take a pause and look at what else account schedules can do. This is a list of some other things that I've done with account schedules over the year. Probably the number one question I get from people who've been using account schedules for a while is, how can you build your statement of cash flows? You absolutely can. It's possible, but you can also do all of these other things with account schedules. So if you look at these, this goes way beyond what we've talked about with just the 9 questions that we answered today with a single income statement. So these can be incredibly powerful reports, and this is a tool that you already own. This is not an add-on. This is not any kind of additional thing. It's inside your system, so it's fast. If you are looking for an update on your reports, this truly is instant. You open the screen and you don't have to wait for that report to churn. So great tool to be able to help you out. If you want more resources on how to use these, I've got 2 blogs out there. The one on the left is related to NAV. It's been out there for over 10 years, and it's time for an update. So I just launched a new blog related to Business Central, and I'm re-releasing all of my information weekly, showing that in Business Central now. So these are both free resources. They're out there available for you to use, and they have a blog series in particular called Account Schedules 101, which are 25 lessons on how to use account schedules. It's giving away the information from my full day account schedules class in blog format. I also have a page of examples, just like what you've seen here today, where I show the end user view of what a report could look like and then exactly how you could build it. You can find that out there for your balance sheets and your income statement and quite a few other different reports. And then the last thing is the formulas page. There are still over 100 to 200 people every single day who are out there on that page looking for account schedule formulas. So it's a great reference tool, and keep in mind that there's a lot of new stuff that's coming out on the new blog, including, I hear, some more video, so that we will have more video explaining how to do that kind of stuff. So watch the new blog if you're a Business Central user. Over the next year, there's lots of new stuff coming out there, but there's a ton of stuff out there that is applicable to Business Central, even though it was built inside of NAV. I want to show you one more thing. We didn't have enough time today for me to be able to show you the best feature of account schedules of all, which is the export to Excel function. The export to Excel function allows you to create your financial reports once in a beautifully formatted form, and then simply refresh your numbers every month. So if you were dumping your trial balance into Excel, you were working way too hard. But if you were already using account schedules and then you were putting them into Excel and then reformatting them, you're still working too hard because you're not using the right function. The right function is the export to Excel function. And that is going to allow you to have beautifully formatted financial statements where you truly can just refresh your numbers every month, and it's going to be consistent and beautiful. So there's a video for NAV and for Business Central out there showing you exactly how to use the export to Excel function. I would encourage you to go out and spend, I don't think either one of them is more than 10 minutes, so you can see what that capability is. It'll definitely change your life. If you're somebody who is doing financial reporting for your company, I think every single person in my class for account schedules gets super excited about this capability when we go over it in class. So it's definitely the favorite for the controllers and accounting managers. All right, so I want to hand things over to Mark to talk a little bit about how much we love to work together with our strategic partners like Inovia.
I hope for all the CFOs and controllers out there that you're going to rise to the challenge that I heard Carrie throw down at the beginning of this presentation, to tell the financial story of an organization without using numbers. That's intriguing. I can't describe how intriguing that is, but I actually think that's a fantastic goal, really. And gosh, being able to interpret for your organization what's going on from a financial results perspective like that, boy, that's gonna shake things up. So that's pretty cool. Anyway, what a fantastic presentation, and spinning financial reporting on its head a bit, I think. And so enjoyed that very much, Carrie. And in particular, if you're not aware, I mentioned up at the front that Inovia is part of our strategic partner program, which means we collaborate very closely with Inovia on a lot of community events. We just recorded another partner panel discussion yesterday, and that'll be available out on YouTube in terms of just better ways to work with your partner. We are both platinum sponsors at DynamicsCon. If you haven't heard of DynamicsCon coming up, that's in I think the 16th through the 18th of March. It's a free community event, tons of learning available. Just go out to dynamicscon.com and of course stop by our booths and say hi for that. And then also, we're very pleased to support Inovia's training workshops, a very robust schedule out on the website if you've not seen that as well. Crossing the functions and different modules of Business Central and Nav with training classes, and we have several on the schedule along with Inovia there. So like I said, proud to support that, and so check that out. And just on community events and spreading the love through webinars like this as well. So as Angie mentioned, this will be up on YouTube, so you can reference it and share it with your friends. And I think it's time for questions. Is it time for questions?
Absolutely.
It's time for questions. It's nice when the slide works out.
There you go. Very good. Angie, do we have any questions from the attendees?
Thanks, Carrie and Mark. No questions have come through yet, but we encourage you to type those in. So if anybody has anything, please go ahead and do that so we can get those answered for you.
Hey, Carrie, I have a question. Something that intrigues me all the time, if I'm a customer and I've just gone through this and I realize what's possible with account schedules and then interlaying the dimensions on top of that, but I've been having a certain structure with my financial reporting for years. What's the impact of changing it at this point?
Yeah, fantastic. It's a great question. I know that whenever I get a chance to talk with people who are in the process of maybe implementing for the first time or re-implementing, I always tell them that they truly have a golden opportunity there to be able to make some changes, not only just to their financial reporting, which is the end of the process, but to their chart of accounts, which is the beginning of the process. And that's really the structure behind all of your financial reporting that can make a big difference. If you've had the same chart of accounts for 10 or 15 years, you already know that there's stuff that's out of order, it's become bloated, there's stuff that you don't use anymore because your company is changing faster than your chart of accounts. And this actually makes a big difference because what happens over time is because that chart of accounts is static and your business changes over time. that means that you have less and less capability over time with your financial reporting. So being able to take a chance to clean that up and to incorporate dimensions in particular to increase your capabilities for reporting allows you to not only replicate what you have already, but to transform your financial reporting process way beyond that, so that you get an opportunity to question what you've provided in the past. If we've provided, a standard income statement and balance sheet and statement of cash flows as our 3-page financial reporting package, what if we could provide 10 incredibly simplified pages that answered questions like what we went through today and got into the question of who is buying what at the end, right? We're practically writing a novel about the story of our company because we get to tell it in a separate way. But that golden opportunity about being able to clean up your chart of accounts, incorporate dimensions, and then make sure that we're ready for that in the financial reports is what makes that very successful.
Yeah, absolutely.
Yeah, that's a great question. I think that one of the things that I get a lot of questions about with account schedules really is as to how in the world do I get started using them. It can be a little intimidating, and there's not a lot of great detail in the documentation that's out there. And I just want you to pay attention to the resources that are out there. I noticed that Innovia has a class coming up scheduled just next week on account schedules, so you could absolutely take one with them. As I mentioned earlier, we have boot camps for controllers where we spend a whole week. And of course, now we do that virtually so that we cover things like financial reporting and all that stuff. And we work with Innovia all the time to put together classes that they may need. So if you're looking for something just for your company, maybe you want your entire team to sit down and learn account schedules together, that's a great way to do it. Workshopping it is another way to do that. I'm working with a company right now who is having their 3 accountants sit with me for a couple of hours every week, and we're building their account schedules gradually for a couple of hours every week so that they get to learn how to do it and ask questions, but it's completely custom for their stuff. So there's all sorts of really cool ways to learn that, but I'll tell you the way that I learned. I just got in there and I experimented. There's absolutely nothing that you can break by building a report. So don't worry about building a new report in your live system. You really are building a report against existing data. You can't do anything wrong. So go in there and start setting up your report. Look up some of those formulas on those blogs that I gave you and just start building stuff and check the results, right? The best thing about accounting is the numbers are always right. So you can compare against what you have already and you will be able to tie those out. It might take you a little longer to experiment that way, just like it took me longer to figure out. But you absolutely can just go in there and try it.
I don't think we've got any other questions. Yeah?
No?
No, none have come through.
Yeah.
Okay.
Well, thank you both for presenting today. It was a lot of great information. I hope everyone was able to take at least something away. I know I learned a lot about New View strategies and how you can help. So yes, thank you very much for the presentation, and we look forward to more presentations with you.
Thanks, Angie.
Right back at you, Angie. Thank you.
All right, well, I just want to let everyone know that we do have more webinars coming up. Next Wednesday, we have InsightWorks presenting on Supercharge Business Central Cloud with free apps. So check out our website for more of our upcoming events, and that's inovia.com/events. And we do have a podcast going on. If you haven't heard of it already, it's called the Inovia Conversation. Our hosts, Steve Waltz and Jeff Pergolski, have provided a lot of content of different podcasts. So check out the podcast page, and that's inovia.com/podcast, to subscribe and get those notifications when those new episodes air. And as Mark mentioned, we have a variety of workshops available for you with New View strategies, as well as from our Innovia team members. So we encourage you to visit our training workshop page at inovia.com/workshops for more information and to register for the training workshop that fits your role. And also, as Mark mentioned, we are sponsoring Dynamics Con conference coming up March 16th through the 18th. And we just encourage you again to register for that free conference. It's going to be a great conference. It's for Business Central users, designed to give you new skills regardless of what your skill level is. So register for that, and we look forward to seeing you again soon on another Innovia webinar. Thank you for joining us.
Thanks, everybody.
Thank you. Bye-bye.